heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde of Bloomberg's World Headquarters in New York. Ed Ludlow is off today. This is Bloomberg Technology. Coming up, we'll get a look at the outlook for US-China relations as tensions still simmer after TikTok CEOs testifying before the US lawmakers, and China remains firmly opposed to a forced sale. Plus, Microsoft's $69 billion Activision deal getting a boost from the UK. We'll bring you the details as regulators narrow their scope of concern. And we'll talk the health of venture investing as accelerator Neo, and also get a look at the state of hiring in the tech world with Greylock as more and more companies announce layoffs. But first, let's check in on these public markets. Actually, pulling off from our lows, the Nasdaq still, though, off by 0.3%. A swirling of concern as we head towards the weekend, maybe a risk aversion as we head towards it, ahead of more concerns around the banking industry, this time coming from Deutsche Bank, coming from overseas, coming from Germany. We still worry about what it means for the ramifications here. Stock 600, the banks part of that index, off by more than 3%. We'll look at what's happening in terms of the turn to the havens. The dollar is down versus the Japanese yen in particular. That is where people are seeking some sort of safety. Let's move it on and look at where perhaps has been seen as a haven over the last few trading days. Today, not so much. Bitcoin off by 0.9%. Interestingly, the biggest exchange out there, of course, Binance, saying that they weren't able to get through some of those trades, those spot trades in Bitcoin. We're meant to be taking back up again at 10 a.m. New York time. Still, though, under pressure for that particular risk asset. But let's get into some of the others. The micro moves. Emily Graffeo's got it for us.
That's right, Caroline. A very volatile day on the cross-asset move. We're seeing investors dive into those safe havens. And interesting when you look at the NASDAQ 100, because for a while there, it had been outperforming the S&P 500 for the last 2 weeks or so, as investors were kind of piling into that as a safety trade. But not today. However, when you look at the individual movers, we are seeing some pockets of strength. First Republic up now, getting a big spike just in the last few minutes, up about 3.4%. Still, though, down about 90% year to date as that banking turmoil persists. And then when you look at the technology stocks, Netflix here now up about 12% in the last 2 days. Bank of America saying that the company's bid to kind of crack down on that password sharing could actually boost subscribers for the video streaming company. C3AI also moving up higher as the trading day persists, now almost 5%. JP Morgan raised their price target from $27 to $28. We're just about there now at $26 a share. And Activision Blizzard also up higher, 5.3%. UK regulators saying that they're going to be focusing that probe on the Microsoft deal just on the cloud services part of the company. And analysts are saying that that means that that deal, that $69 billion takeover of Activision from Microsoft, has better chances of going through. So we're seeing a nice lift here. Not enough, though, to lift that NASDAQ 100 higher. Still on the top line seeing weakness. Caroline.
Well said. Emily Graffeo, wishing you a wonderful weekend. Thank you for all of that. Let's look into, well, the geopolitics at play that has really caught our attention the last couple of days. TikTok CEO Shou Chew doing little, in fact, to calm US concerns over national security during his appearance in Congress. During the testimony, we spoke on our show with Congressman Jim Himes for his thoughts on an outright ban of the social media app. Take a listen.
Look, I've said this before. I work a lot in national security. TikTok is not on my phone. It's not anywhere near my phone. And people in sensitive positions, because, of course, TikTok is probably more accessible to the Chinese government than most platforms, shouldn't be on anybody whose phone who does this stuff. But look, an outright ban, this is a deep breath moment, right? Because the American people need to reflect on the equities associated with saying, sorry, the federal government is not going to let you use this media. And my question is, where is the limiting principle?
One congressman, not pro a ban. Let's get to Bloomberg's Alex Barinko, who's been speaking with a lot of other congresspeople. And, well, what do we think? The showing from Shou Chew, did he persuade anyone otherwise?
I mean, Representative Himes there said deep breath moment. There were not a lot of deep breath moments in that room yesterday. The fervor in that room, Caroline, I have to tell you, it was one of the most contentious hearings we'd heard, and it didn't seem like Chu was really pulling a lot of folks onto his side. From the drop, Chairwoman Kathy McMorris Rogers basically said, we don't believe you and the answers you're bringing to the table of how you're going to secure Americans' data. That sentiment was echoed from both sides. On Chu's right, the Democrats were coming after him about how to protect children and data privacy and why isn't this an American company. Republicans on Chu's left were voicing the same. So it seemed like both in that room and based on a lot of the senators and that we are hearing from during the hearing, that there is a lot of wins against TikTok right now and a lot of concern that Chu's testimony honestly stoked yesterday without answering any of the kind of questions that a lot of those lawmakers had.
Whatever the case, if they do choose to ban, it's going to take a while, Alex. What about hearts and minds of people that use the app? What about some of the influencers, the TikTok creators who are up on Capitol Hill too?
In that room, sitting behind TikTok CEO Shou Chew, was a group of influencers that the company had brought down to Capitol Hill to kind of show off some of the 150 million people that not only use the app, but also have their businesses on the app. I had an opportunity to talk to some of those folks, about half a dozen of them, and I asked all of them, hey, if your representative or senator votes to ban TikTok, will you vote for them? And they all unequivocally said, no, they would not get my vote in that situation. So we heard it from some folks in the room, from the influencers in the room yesterday. We are also starting to see on social media some users start to talk about some of their complaints with this kind of political uproar. But to your point on time there, Caroline, if there's going to be legislation, these things do take time. For TikTok, even though yesterday was a really bad day, time is kind of on their side. And as long as they can draw out this process, or at least kind of drum up some discord so that both parties aren't aligned enough to pass a bill, that is kind of their best case scenario after the fervor that went down on Capitol Hill yesterday.
Alex Barinka, you were there throughout. We thank you so much. Meanwhile, more on US-China relations. I'm pleased to say we're joined by Amy Kellico, principal of the Albright Stonebridge Group. And Amy, your job is to advise companies, non-profits about relationships with China. What do you think the overall tension is like at the moment? How difficult is it for companies, technology companies in particular, to think that they can make inroads into China and vice versa?
Tensions are incredibly high, that is for sure. And it is one of the leading issues that foreign investors, not even just American ones, obviously Chinese investors in the United States as well, point to: geopolitical tensions, US-China relations being at a real low point, thereby causing additional risk for companies as they think about expanding in the China market, or of course, Chinese investors having any presence in the US market. These risks are growing, they're proliferating around the breadth of concerns between the US and China on bilateral relations, on global issues, the war in Ukraine, Taiwan, human rights, and as you asked about, technology competition. And so the stakes are quite high for companies as they're trying to navigate these geopolitical tensions that are beyond their control, but of course impact their bottom line and their business.
We have, of course, been thinking about the ramifications for users, for companies. Just from the perspective of the CEO, Shou Chew, anything more you think he could have said? Anything more that you were listening for that could have dialed back any of this?
I think that he did not have a good day yesterday. I think it would have been difficult for just about anybody in 5+ hours of testimony to be fully successful. But I think at the end of the day, he really didn't convince any stakeholders which were going to be very difficult to convince in the first place, that Beijing's continued interaction with TikTok, a subsidiary of ByteDance, has ended, has been finished. I think what the CEO is trying to say is that the company has invested over $1 billion to try to put in place firewalls, localized data, make sure that coders aren't working from Beijing for a subsidiary here in the United States. but he couldn't prove a negative. He couldn't prove that in no way will the Chinese government be able to influence the parent company today or in the future unless there's a separation.
Amy, talk to us about that separation, because there was perhaps not only a difficult reception in the United States from lawmakers, but also Chinese lawmakers hadn't made Shou Chu's hand that much easier ahead of his testimony, because we'd heard from the Commerce Secretary over there saying, look, any sort of separation is not going to fly with us.
Exactly. That was very difficult because that news from Chinese Ministry of Commerce came out the morning that Shou Chu was testifying. And that news was exactly as you said. The Chinese government will likely firmly oppose any kind of divestiture from ByteDance of its subsidiary TikTok. And so that was going to make Shou Chu's days much, much more difficult, especially since TikTok has been in negotiations with CFIUS, with U.S. administration officials, and to avoid a ban, the likely way forward was going to be a divestiture of ByteDance from TikTok. Now, with the Chinese government saying that is not possible, the U.S. government has to think long and hard of what are its next steps here. Yeah. They have the option of an executive order taking action, of CFIUS saying that a ban should go in effect, presenting it to President Biden to either accept or reject unless a divestiture happens, or there could be a congressional route here. I think for the administration, one of the concerns is, of course, when the Trump administration tried to ban TikTok, it faced judicial oversight, of course, and an overturn of the ban.
Yeah.
And so that is why this bipartisan piece of legislation known as the Restrict Act that was introduced in the Senate would give the authority of the Commerce Secretary, working with the Treasury Secretary in cases of national security where CFIUS has reviewed the bill, that would give the administration the ability to look at these kinds of platforms and take action to restrict them in the United States if there were concerns.
And let's just look for a moment, Amy, at what our viewers, our audience, think about what that would do to relations if it happened. We went to a poll and said, if it gets banned in the US, what impact will it have? Only 16% thought it would be catastrophic, but 47% interestingly said no impact. What do you make of the fact that nothing's going to happen overnight? Is there no impact in the interim? And even if we get some sort of ban between tensions of the US and China, educate us here.
Well, I think I would vote in that poll that, of course, it would have an impact, but the impact wouldn't be overwhelming. So I do think your viewers are right on that, because the U.S. and China face so many other challenges. But certainly for trade and investment ties, this would send a strong signal that the U.S. government is looking at a Chinese-owned platform differently than it's looking at regulating even the American platforms that many of those senators yesterday talked about needing better regulation. And so this is not an either or as far as should privacy be enhanced, protecting American citizens, should they be in a better position that way through U.S. legislative action. But back to the question about U.S.-China relations, this is one of many things that is weighing on the bilateral relationship. And I think both leaders in Beijing and I know leaders in Washington, D.C. are trying very hard to tamp down tensions as we deal with issues like the war in Ukraine, tensions over Taiwan. But in trade and investment, channels, technology competition is going to continue to ramp up.
Amy Selico, thank you so much for your time. Albright Stonebridge Group's principal. And of course, some of those tensions and those fighting in terms of trying to race towards technological development is AI. Let's just look at the US pinup for AI, OpenAI. It's currently saying that some ChatGPT users may have had payment data exposed. OpenAI says it's confident that there is no ongoing risk to users' data. But of course, many are going to be focused on the wealth of people using ChatGPT in its fourth iteration as it is, and worried about, indeed, some of their data privacy. Let's turn now to some earnings coming out of China. And smartphone maker Xiaomi beat profit expectations amid a difficult quarter. Of course, the smartphone shipments were down dramatically But the Beijing-based company still managed to record net income of $218 million, beating analyst expectations. Meanwhile, though, Meituan, the world's largest meal delivery service, saw revenue surge on strong demand for takeaway. The company saw sales hit $8.8 billion last quarter, topping estimates. Although the Beijing-based company is preparing for choppy waters ahead, this is post-pandemic resumption of economic activity. Maybe means you go out and eat in restaurants, may slow the online demand for food delivery. Coming up next, we head over to the United Kingdom, where Microsoft's $69 billion deal for Activision is taking a step forward. Shares of Activision responding positively to the news, currently higher by more than 5%. From New York, this is Bloomberg. Time now for going viral. Today, we focus in on Twitter. The social media company will begin removing so-called legacy verified marks from user accounts next week, as it works towards a model where, only paid subscribers and members of approved organizations have that status. The move to strike legacy verification begins April 1st, and it's one of the earliest policy changes announced by owner Elon Musk, who described the existing program as corrupt shortly after taking over late last year. Joining us now, Bloomberg's Aisha Counts. Aisha, remind us of the verification process prior to Elon Musk arriving.
Yeah, so before Elon Musk came on, it was very similar to what you would see at any other social media company, like Meta, for example, with Facebook and Instagram. If you were a notable person, whether you had a lot of followers, you were a journalist or a politician or an athlete, you could go and apply for verification. You would maybe put in your photo ID, give a few clips or links to show why you were notable, and then you would wait to hear back, and that's how you would be verified. So it was a very standard process, very similar to any social media platform.
And now?
Now, that's all changing. Now, to be verified, you're going to have to pay a monthly subscription. So it's $8 a month if you're paying monthly, $7 a month if you're paying annually. You still submit your government ID or some sort of identity verification, but you have to pay. So you're essentially buying your check mark. And the people that previously were verified, maybe you were a journalist or a politician, that's no longer enough to actually receive your blue check mark. You will have to pay if you want to see that.
Okay, so Aisha, I'm going to be selfish. My blue check mark is a goner unless I'm going to pay up?
Basically, unfortunately.
Okay, and remind us of how the breakdown goes. There's different colors for different types of organization. Do we expect this to continue, be sustained? Is there any movement in terms of more types of colors and what verification really means?
I mean, who knows, right? Maybe he will add some more colors, but we can expect that. Believe gold was for politicians, blue was for organizations. We'll see if other colors are added. It's gone through a lot of iterations, and there was a lot of confusion when Elon Musk first announced it. But I think as of now, we can just expect to see blue and gold, and we'll see if he changes anything else in the future.
Of course, Meta also rolling out a paid-for verification too. Aisha Counts, so good to have you. Thank you very much indeed. Now, let's turn now to talking tech, and Microsoft's chances of winning antitrust approval for its $69 billion takeover of Activision Blizzard got a boost after UK regulators narrowed the scope of their probe to focus solely on cloud gaming. The Competition and Markets Authority said it changed its mind after weighing a significant amount of new evidence that Microsoft would be unlikely to profit from restricting access to blockbuster franchises, such as Call of Duty, on rival consoles such as the Sony PlayStation. Meanwhile, ARK Invest CEO Cathie Wood used yesterday's sell-off in Block as a buying opportunity after shares plunged following Hindenburg's announcement that the firm was shorting the stock over so-called fraud within the payment company's CashApp business. Earlier in the week, we spoke with Cathie Wood about her investment strategy.
What we did do was we concentrated our flagship strategy, so ARKK, and our other strategies, ARKQ, ARKW, ARKF, and we moved in the flagship's case from 58 names in February of 21 when we peaked down to 27, 28 names.
Just outlining why ARK tends to double down on its focus on certain winners, certain choice companies during more torrid times, and also tax loss harvesting. That was Cathie Wood there. Coming up, well, we turn to something Kathy Wood also likes, crypto. Terraform co-founder Do Kwon charged by US prosecutors with orchestrating a years-long cryptocurrency fraud that wiped out at least $40 billion in market value. We'll bring you the details next. Let's take a look at Bitcoin, because of late, it's been deemed some sort of haven, particularly amid the financial fallout, the worries about the banks. Over the last 5 days, basically flat. We have had a run-up in the last month. From New York, this is Bloomberg. US prosecutors have charged Terraform Labs co-founder Do Kwon with orchestrating a massive cryptocurrency fraud that's said to have wiped out about $40 billion in market value. Kwon was already a fugitive from his charges in his native South Korea and then was arrested Thursday in Montenegro. Bloomberg's Caroline Hyde joins us to discuss, and almost this was the beginning of what was then a frenetic fallout for the crypto ecosystem, really.
Yeah, and this was some time ago now. This was last May when it was the big Terra Luna collapse. I'm sure you remember well, Caroline. Terra USD was, of course, an algorithmic stablecoin, so used an algorithm in the trading relationship with Luna in order to maintain that one-to-one peg with the US dollar. Then it collapsed, and it had ripple effects all across the crypto universe, including the downfall of Three Arrows Capital. And ultimately, this was a factor in the downfall of FTX as well. And what U.S. authorities are alleging, according to this indictment, is that Do Kwon deceived investors about aspects of the Terra blockchain, including its technology and to the extent to which it has been adopted by users, hence these fraud charges. And we understand now that the U.S. District Attorney's Office in Manhattan is asking for his extradition to New York after that arrest in Montenegro. And what is so interesting, Caroline, and if that does happen, this will be the same prosecutor that is also pursuing the case against Sam Bankman-Fried. So to a certain extent, all of this is coming full circle.
It is. It's going to be an interesting place to be in the next few months. Kaylee, what about other stablecoins? Today we get news of outperformance in one.
Yeah, in Tether, which is the biggest by far, they're saying that they're going to have about $700 million in profit this quarter, so similar to last quarter. But what is super interesting is they actually say circulation of USDT has increased 18% since year end. It has seen a big uptick in circulation in recent weeks because of what's happening with some of its competitors. Of course, you had Paxos's BUSD getting cracked down by regulators. That kind of takes it out of commission to a certain extent. And then Circle's USDC had some of its reserves in Silicon Valley Bank and got wrapped up in that whole collapse as well, which undermined confidence and ultimately broke its peg briefly against the U.S. dollar. So Tether has been one of the beneficiaries of that. It now accounts for about 60% of the stablecoin market.
Interesting that Binance stablecoin today, we understand there has been that outage for Binance in that spot trade of Bitcoin today, apparently back up and running. Kaylee Hyde, brilliant as always. Thank you so much out there in Washington for us. Coming up, we've got so much more on the banking crisis, how it was sparked by SVB and others, and community banks, how they're stepping in, like the Oakland-based Beneficial State Bank. The chair of that board, Kat Taylor, is going to be joining us next. Checking in on those bank stocks. We are worried about them once again, particularly in Europe. Deutsche Bank under significant pressure today. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York, where it is 12:30. It's 9:30 on the West Coast. It's 4:30 p.m. in London. Stocks finishing the day's trading. European trading actually seeing under pressure across the board. Stock 600, as you'll see, currently off by more than a percentage point. Why? It's the banks that lead us lower. I focus in on what's happening in terms of Deutsche Bank. At one point, having its worst day since March of 2020. It actually ends the day having its worst in but a week or so. But this just continues to show some of the fear around the solidity, the backing of these financial institutions that are so important and in many ways systemically important. We know that Citigroup is saying Deutsche Bank, the fears are irrational at the moment, the market sell-off, but sometimes irrationality doesn't need to have any rational cause, but it certainly has an effect on investor sentiment. I'm looking at German two-year, the flight to safety. We see bond market really getting a bid, and the two-year yield sinks some 14 basis points. Let's get back, though, to what this means from Europe to the US, the banking crisis more broadly. It's had repercussions both in Europe and across the pond. And let's zero in on the smaller banks for an instant. Avenue Capital Group, in fact, CEO Mark Lazary talked about keeping money in smaller regional banks earlier. Take a listen.
What is the benefit of keeping your money in sort of a smaller bank? Even if that bank is doing extremely well, It's not one of the banks that, in essence, the Fed worries about systemic risk.
Let's get an expert in the smaller banks and how they're doing. Kat Taylor, co-founder and chair of the board of Beneficial State Bank, an Oakland-based community development bank. I want to really get to understand, Kat, what you've seen, the demand for your services or the worries of your customers.
Well, first, thanks very much for, on behalf of Beneficial State Bank, having us on today to talk about banking. Financial services is the largest industry in the world, and it fuels every other industry, and we need it to finance the world in which we actually wish to live. So first, what's suggested by the failure of Silicon Valley Bank is that we need to return to stricter regulations as envisioned by the Dodd-Frank Act, which have been watered down by industry lobby ever since. In particular, we need to return to strict regulatory stress testing of all banks over $50 billion in assets, not just those over $250 billion in assets. For instance, Silicon Valley Bank was $220 billion in assets at the time of its seizure. If we had stricter stress testing, it would attend to 4 buckets of risk and mitigate them before crisis occurs. Those are, I can address those at any time, Caroline.
Yeah, I mean, it's interesting that you say all of this because we had news a little bit earlier from the New York Fed, for example, saying regional Fed banks will adopt policy to public information requests, and they're going to implement transparency policy by the end of 2023. Do you think the move for regulation is going to be quick enough, the support coming from the likes of Janet Yellen saying maybe we'll assess whether depositors need more support? Is that enough to secure your own users right now, the depositors? Are they being confident?
Well, at Beneficial State Bank, we serve the Main Street economy, which is a more resilient banking model. Silicon Valley Bank had a devaluation of its marketable securities portfolio in the rising interest rate environment. It had stretching out of duration with the slowing of prepayments in that portfolio. If they had to liquidate it, they would have recognized losses that hit capital. They had extreme concentration in their deposit base among startups and venture capitalists.
But does it a community bank not have that too, Kat?
Yes. So we've financed Main Street. That means that we're supporting small businesses, fair consumer products, environmentally sustainable companies, nonprofits that are community-based, and we have a very sticky deposit base. We are mission-driven, and our depositors love us for many reasons. They don't move in lockstep to flee the bank. We also insure deposits up to our largest deposits with special products, and we have a very strong capital buffer. But what we really need is for the regional commercial banks and the community banks to have higher FDIC limits, more like $10 million, to avoid the flight to subsidy that occurs when everyone goes to the top 5 banks.
I see. And have you been seeing that, therefore, or have you actually been gaining deposits, or have you been losing market share to those systemically important lenders?
So initially, for instance, the Silicon Valley Bank depositors, especially the startups, were attracted to our mission-driven bank. We're mandated to achieve social justice and environmental well-being, as well as being financially sustainable. But then came the cry of their venture backers that they had to go to the top 5 banks. That's not a flight to safety. It's a flight to subsidy, because those banks are too big to fail, and we'd have to bail them out.
Yeah.
If we could allocate FDIC insurance at a higher limit, it would keep deposits in the community banks and the regional commercial banks, which is where we need them to fund an economy that's resilient and supports all Americans.
Kat, you are so mission-based, and when you go onto the website, when you understand on your Twitter account what your bank stands for, how have you been thinking about diverse founders, people who haven't had access to financing in quite the same way that some others have been able to? Many would say Silicon Valley Bank did just that. They were able to take, well, they took more risky bets, but they backed people perhaps without a large minimum. Are you able to do that and offer that to some founders who are now looking for deeper connections, different financial relationships?
Absolutely. So we're dedicated to all of our stakeholders, the communities that we serve that are largely low income, our customers who are very diverse, our colleagues, the public interest, and the environment upon which we all depend. This is just a smarter way to bank, to recognize all of the constituencies, but all of the risk areas. Depositors who are seeking a mission fit can also be assured that their deposits are being lent back out in a way that sustains a resilient, equitable economy. We do fully insure deposits up to very high levels, the biggest deposits that we have. And we are advocates for changing the banking system for good with tighter regulations, higher FDIC insurance, and, for instance, the Department of Financial Protection and Innovation, which is an additional regulatory scrutiny since the watering down of Dodd-Frank and the evisceration of the Consumer Finance Protection Bureau.
30 seconds. Have you reached out to regulators? Have they been reaching out to you?
We're in very close touch with our regulators at all time. We embrace our regulations and our regulators, and we expect that they will have a very good analysis of what exactly happened at Silicon Valley Bank and how we can prevent that from rippling through the system.
Kat Taylor, really great to get your expertise. Thank you, CEO, co-founder and chair of the board of Beneficial State Bank. Now, let's talk about autos, completely different, but in many ways they lend out too. But let's talk about Ford, how it's ramping up its electric F-Series pickup factory under construction over in Tennessee. Now, the plant will ultimately produce 500,000 trucks a year, about 40% more than the company forecast back in November. The car maker is seeking to reverse losses on its EVs, expected to reach about $3 billion this year, those losses. But Ford CEO Jim Farley says he's confident those losses are a temporary snag. He spoke earlier to Bloomberg. Take a listen.
We're not going to spend all this money to lose money, so this is a profitable enterprise. We think we'll be able to make money a couple years faster than Tesla did. As you said, there's an investment. We got to build the plants. We got to engineer the vehicles. That's why we're losing a lot of money. So we got to do a couple things. First, we got to scale. Scaling helps cost. We got to design the vehicle differently for a smaller battery, more efficient. And we have to get our distribution and manufacturing costs down. This plant, for the same size, is going to be about 30% smaller. And that plus what happens inside the plant is going to help us make money. All of those things are required to make money because the battery is very expensive.
Jim, as you say, scale is important to your plans here. As I understand, the projection is you'll have an 8% positive margin by the end of 2026. What scale assumptions do you have built into that model to be able to deliver those results?
We hope and we plan on building capacity like this plant, 2 million incremental units a year. We make about 5 now, so 2 million is like the company is going to grow by more than 30%. So that scaling is really important. I mean, 2 million units, no one has ever done that in North America especially. But, you know, we're already number 2. Our vehicles are best sellers in their segment, like truck and van, the E-Transit. So we're very optimistic that we can get that profitability and we can scale. The biggest thing on scaling is batteries.
Jim Farley, the Ford CEO there, talking with David Weston. Now coming up, Oracle scraps jobs at its Cerner Digital Health Records unit after the CEO promised to clean up the subdivision. More on that next. And as we head to break, we asked some of our VC guests over the past week what their outlook for tech investing is after the SVB debacle. Take a listen. This is Bloomberg.
This is wartime for startups.
Before all of the SVB excitement, I think no one thought too hard about, is my bank safe? Is my bank secure?
I believe in a few months, 3 to 6 months, business will be back to normal.
We're doing deals every week. I mean, I made an offer last week, in fact. So, I mean, we're very, very active.
At this point, FDIC money is safe. We're encouraging our founders to put money back in SVB.
Now, before we all became consumed with the banking crisis, tech concerns were largely around layoffs. Amazon announcing another 9,000 this week, and now Oracle saying it will cut jobs at its Cerner Digital Health Records unit, particularly in marketing. This is as the software giant works to integrate last year's $28 billion acquisition. Let's dig in more onto the talent pipeline, what it means at the moment, particularly for startups. Greylock talent partner Holly Rose Faith joins us now for more on all of this. And Holly Rose, you're someone who thinks deeply about talent retention, but also acquisition for the startups that you work alongside. What is it like right now with all these talks of, oh, suddenly we're awash with talent and people that can be hired? Is that true?
Well, first off, Caroline, thank you so much for having me here today. I'm excited to talk about talent with you. So what is the state of the talent market that we're in? I like to think of it as quality is in, quantity is out. If you think back to the last couple of years, the time was coined the term the Great Resignation, because we had never seen so many executives making changes across the ecosystem as we previously had. But what no one was talking about was the quality of those opportunities. And so what we're seeing right now, given the constraint on capital, if a startup is hiring an executive, it's a really well thought out role because it's viewed as something that's going to help change the course of the business.
What are those executives looking for? Because when perhaps they're coming from one of these big tech giants, the Amazons, the Metas, who are letting go of really talented staff, but they're used to getting a lot of money. What do they therefore need to be offered by a startup that perhaps doesn't have as deep pockets from a cash perspective?
Well, what we're seeing across the industry right now is that executives who previously had not engaged in opportunities are. And those executives are both from, companies where they've been impacted by layoffs and those that haven't. To your question on the compensation piece, compensation has started to plateau for a bit, but the best executives are still going for a premium.
What about equity? Is that something that they're looking into as the way in which they can be recompensed? Because, of course, valuations have been cut.
The importance of equity is to really view it as kind of what is the total ownership that you're going to have within a company versus what is the value given the flexibility and change in valuations right now.
Okay, so what ways in which are CEOs and companies therefore having to lock in executives? Are they having to say, look, we'll give you a bigger chunk of equity as the valuation has fallen, and they're doing clever ways in which they can make sure that someone's going to be dedicated to the growth of their business, even if perhaps they can't offer them a nice check on a monthly basis in terms of actually monetary value?
Yeah, it's happening across the board, and it's so company by company dependent. But the advice that I give founders is what's on top of mind for executives right now when they're talking to a company is they want to know some of the tougher questions up front. So I give founders the advice of when you have that first, second conversation with an executive, talk about what is the runway of your business? What's working really well? Why do you want to bring this executive in to help change the course of the company? And all of that kind of helps feed what are going to be the offer terms later on in the process.
What about a focus on diversity? Because there was a lot of talk and focus on that. Has there been much walk, much action in this current environment?
Diversity is still on top of mind for companies. I'm working on an executive search right now. It's a CMO search in one of our portfolio companies. And the candidates are 60% women, 40% men. And of that group, 20% are from underrepresented minorities.
What about outside the world of marketing, though?
Outside the world of marketing, yeah, you see it across the board. It's still on top of mind for people. It could be a little company by company dependent, but it's still a topic of focus.
Good. Greylock talent partner Holly Rose Faith. It's really great to get some inside track on what it's like in the hiring atmosphere right now. Thank you for coming on. Meanwhile, coming up with the AI arms race going on, NEO is partnering up with OpenAI and Microsoft to help companies navigate this new focus. What are they doing in terms of hiring? What are they doing in terms of growing? NEO CEO Ali Partovi is going to be with us to break it all down. Let's just take a look at the publicly traded tech right now. So we had to break. NASDAQ still under pressure, but not as much as it had been earlier. We're currently off by just 0.3%. This is Bloomberg. NEO, it's a startup accelerator founded by Silicon Valley investor Ali Partovi, forging a partnership with OpenAI and Microsoft to give free software, free products and advice to companies in a new track focused on, you guessed it, artificial intelligence. Companies accepted to NEO's AI cohort will receive the credits to use from Microsoft's Azure Cloud, as well as OpenAI's GPT language generation tool, DALL-E, the image creation program, for example, and other tools. Ali Partovi, I'm pleased to say, joins us for more. And how quickly did this suddenly evolve, Ali?
How quick? Say it again. Sorry.
How quickly did it evolve? Because it feels like suddenly there's a wealth of news around OpenAI and certain relationships with Microsoft.
Yes, indeed. Caroline, I think we're going to look back on 2023 as the year that life changed because of AI and because of these innovations led by OpenAI and Microsoft. And frankly, it's dizzying how fast they're innovating and how fast these innovations are coming out. At the same time, I think we're still only seeing the tip of the iceberg.
Ali, give us an idea of how many of the startups that you would generally see were in the world of artificial intelligence. How many would you have, and suddenly has it become a whole lot more?
I would say it's like a gravitational force that's pulling all companies, not just startups, all of the tech industry to realize this is the new platform, this is the new technology that everybody needs to embrace or be disrupted. And the comparison I would make is think about how much life changed when the iPhone came out. You know, and imagine your life before the iPhone or before the smartphone, how much you depend on it today. I think it's going to be similar. And the other analogy I'd make, though, is for the first year and a half, the iPhone had no app store. It had no apps. It was just the phone with it, you know, what it came with. And that's what OpenAI has been. That's what ChatGPT has been for the past, several months, has been just, OpenAI's raw technology. But this is the tip of the iceberg, because the true incredible transformation is going to be all the things that third-party companies and startups build using this technology, using OpenAI and Azure.
Like what? What are the most obvious fits at the moment do you think are going to scale, add to our productivity, and ultimately make you a lot of money?
Yes. Although I would say my imagination is limited and pales compared to the imagination of the dozens and hundreds of incredibly innovative, young people coming up with new ways to use this technology. But what I can tell you is that if you are a 20-something software engineer, maybe a few years out of college, working at a great tech job, there's no better way to maximize your impact in the world than to start a company right now building with AI. And that's why we created this startup accelerator, with help from OpenAI and Microsoft, to provide a boost to these first-time founders who have the potential but might need the extra encouragement and extra support to aim higher and maximize their potential.
How do you ensure, because let's just for a moment think about the hype cycle around crypto when suddenly everyone was putting blockchain in their name. How do we ensure that the companies that are willing to write checks, whether they be the big tech giants with a whole load of cash on balance sheet, or whether they're the VCs that still have money to put to work, how do they make sure that they are backing a company that is truly innovative in the space of AI and using it as a core technology rather than just bolting it on?
Honestly, I don't think there's any way to be certain of things. And as an early stage investor, you have to recognize that you can't be sure. You're taking risk. And as an early stage founder, you're taking risk. And, people who aren't comfortable with that usually don't become founders. But I am absolutely certain that this is where the focus of innovation is going to be, and that some of these companies are going to be the transformative companies, just like companies like Uber, Tinder, number of companies that were enabled by the iPhone that just weren't possible before the existence of the iPhone, and as well as everything else pivoted to build using the iPhone, right? Even existing companies like services like Gmail worked before the iPhone, but now where do you use your Gmail? Mostly on your phone. And in a similar way, I foresee that within a few years we will see that almost everything you use is going to use these technologies like OpenAI and Azure.
And very briefly, are they all being born in the US? Are you looking for foreign innovators?
We are, I'd say we're agnostic. I think one of the wonderful things about the United States is that it is a beacon for immigrants. It is a land of opportunity. And also the great universities of the United States attract the brightest and hardest working from across the world. So most of our founders are people who studied at American or North American universities, but that draws the best from across the world.
Ali Partovi, thank you. Of course, back to Airbnb, came from Iran yourself. We thank you for your story. Neo, CEO. That does it for this edition of Bloomberg Technology. Don't forget to check out our podcast. Tune in for our Twitter Spaces. It kicks off in but a couple of minutes' time. We've got a great set of guests for it. From New York, this is Bloomberg.